Property investing can be a lucrative and rewarding venture. I know some people make it appear to be a surefire way to build wealth and secure your financial future. But here's the thing. There are some brutal truths that people don't tell you about investing in property. Unfortunately, these aren't as glamorous as the stories you're going to see on the blog or read in the blogs or hear on the podcasts, but that's what I'm going to discuss with you today so that you're a better, more informed property investor. Now, regular listeners would know that we usually produce 2 shows a week, but in the month of January, I'm offering you the summer series, where there's going to be 3 shows each week. You're probably going to have more time to listen to podcasts, so there's going to be 1 show to keep you up to date with what's happening in the markets, and 2 shows from our library that I think will be of interest to the many, many new subscribers who haven't listened to all the back episodes, and they're also going to be of great benefit to regulars. Now, after listening to this show, if you believe you got some benefit, may I please suggest that you follow this show. Look, in the old days it was called subscribe, but every podcast app has a way of keeping you up to date each time I bring a new show out. So please click that button. Now, let's get on and learn some brutal truths. Hey, here's a warning. Today's podcast is going to be a little bit different. Today I'm going to be a bit brutal. I'm not going to hold back, and I'm going to tell you some brutal truths about property investing. You're going to learn about some of the things that can go wrong. You're going to learn about some of the frustrations of being a property investor. I'm going to show you some of the ways slick marketing could lead you astray. But stick with me, because it's not all negative. You see, I believe understanding what could go wrong is one of the ways of making sure things don't go wrong. And I want you to enjoy the success that a small group of property investors enjoy. And why do I say a small group? Because only about 1% of all those who own investment property, only about 20,000 Australians own 6 or more properties. We know that most investors never get the financial freedom they deserve. Now, of course, this isn't the type of information most people will tell you about property when you first get started. They never tell you that most new investors sell up after the first 5 years. And that's probably because many of the people you speak with are trying to sell you something. They may be trying to sell you a property, or in other cases, it could be their services, buyers agents. They want you to get excited about property because they want you to spend money, and so they tell you about all the great things that you could achieve, but not so much about everything that you have to go through to make that happen. So this episode of the Michael Yardney podcast is my attempt to redress the balance a little bit and share some of the brutal truths about property that you don't often hear about. Now, this may sound a little bit like a negative episode. If you're listening to my podcast for the first time, you might think, why would somebody who's negative about property produce a podcast about property? Well, I'm not negative about property. I've got a very, very substantial property portfolio, and it's been said that I've educated more successful property investors than anyone else in Australia. But my aim is to make you a more successful property investor, so I believe it's important for you to see both sides of what can happen. The problem is that my team of property strategists at Metropole see many of the things that can go wrong when they come across people who come to us to get a strategic property plan, and these people then find there's no way they're ever going to achieve their financial goals with the properties they own. So let's go through some brutal truths about property that no one else will tell you, and at the end, we're going to tell you how you can develop financial freedom and the stages you've got to go through. And then, of course, in all my future episodes, we're going to talk a lot about the good stuff of property as well. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Despite what some people will tell you, property investing isn't easy, but it's simple. Now, that's not a play on words. What I'm trying to say is that if you do what most property investors do, you're going to get the same result as most property investors get. And that's not pretty. And we know that about 50% of those who buy an investment property sell up within the first 5 years. And 92% never get past their first or second investment property. So, as I said in the introduction today, we're going to talk about 16 unfortunate truths that you really should know about property investing, whether you're looking to get into it or whether you're already in the game. Now, on the other hand, if you do things right and if you head in the right direction, if you understand what we're going to discuss today, you're going to have the odds stacked in your favour. So let's talk about the first one, and the property market goes through cycles. Look, recently we've had a once-in-a-generation property boom. If you go back to my podcast a year or so ago, I predicted this. Now, I didn't think it was going to be as great a property boom with 20+% and up to 30% capital growth in some locations through 2021, but I did see everything aligning to give what's a once-in-a-generational boom that's going to continue on this year, but it's eventually going to peter out. And when it comes to an end, you better be owning the right properties, because we're then going to come to a period of lower growth, stagnant growth, and property values falling in some locations. And for that reason, you're going to need to own the right properties to see you through the more challenging times. Now, the value of well-located properties has always increased over the long term, and in many locations, they've doubled every 10 to 12 years, but clearly not in all locations. Just look what's happened to even the capital city of Perth. So there are times in every property cycle when values are stagnant, sometimes for a number of years, and there are short periods when property values will fall. Now, A-grade homes and investment-grade properties are less likely to drop in value as much. They're less volatile, but property prices do fall, and occasionally for a number of years in a row. And this is related to finance, to the availability of credit, interest rates that are available, consumer sentiment. So I guess what I'm saying is get used to it. It's just what property values do. Having said that, I will do a future podcast shortly on the property cycle and how to pick where we are in the property cycle so you understand what's ahead. The second brutal truth I want to share with you is you need a significant amount of money to invest. Now, I can't believe I've even got to tell you this, but seeing a lot of people seem to be saying the opposite, I better explain this to you. Yes, you need money to invest in property. You can't invest in property without having financial discipline and having money to invest with. That may sound obvious, but now that you've heard it, if you spend time on the internet, though, you're going to come across people who say you don't need money to get into property. You can have strategies that bypass the banks. Others will tell you there are ways to control property with other people's money. These people are pandering to the financially illiterate beginning investors, people looking for a get-rich-quick scheme. Let me be blunt. If you don't have the financial discipline to save a deposit, you shouldn't be taking on the commitment of borrowing money to get involved in property. Look, let's be clear, you need money to invest in anything. It just shocks me that people believe that for some reason it's different in property. And again, these are the same sort of people who believe stories that you can get rich really quickly as well. Look, I've been getting emails recently explaining how one property spruiker was able to get his clients $134,000 profit in 30 days. Just come along to my webinar and I'll show you how. I've seen nonsense like you can buy 7 properties in 10 years or own property with your lunch money. These promoters are preying on the people's desires, their wants, their needs. Because people want to invest in property, especially if they've got no money and they want to get rich, there are people out there who are going to tell you what you want to hear. So if you're looking to get into property to get rich, well, I'm sorry, you're in the wrong game. Why not try the lottery? You've probably got more chance of it happening. The odds are not with you getting rich quickly in property. Having said that, you can get rich over the long term, but property's not a get-rich-quick scheme. The third unfortunate truth I want to explain to you about property is that it takes the average property investor 30 years to become financially independent. Now, that follows on with what I was just saying, but the reason is most investors waste the first 10 years or so making mistakes, learning what not to do. Then the next few years are taken up selling some of the underperforming assets and getting their financial house in order, and then it takes 2 or 3 good property cycles to become wealthy through property. So you go through a number of stages in your property journey. There's firstly the educational stage, and then there's the asset accumulation stage. And once you have a large asset base, then you can transition into the lowering your loan to value ratio stage and eventually living off your property portfolio. Of course, there is a shortcut, and that's by owning the right properties, not making those mistakes that most investors make in the first 10 years, by getting the right advice, by having a strategic plan, and getting mentors early in your journey. The problem is this comes at a cost, and that's why many investors bypass this stage. They think they can do it themselves, but the most expensive advice is the free advice you get on the internet that's wrong. That's why at Metropole we always start by putting a strategic property plan together before we even talk about where or what or how much property, because you've got to know where you want to end up, what's going to happen along the journey, how long your journey is going to be, what your risk profile is going to be, are you going to stop and have a baby in the meantime, all sorts of things, and that goes into the strategic plan. And we've had lots of our clients at Metropole become financially independent much, much sooner than 30 years. But I guess my blunt truth is that it takes the average investor 30 years to become financially independent, and most don't last that long. They don't stay in the game. The fourth unfortunate truth I want to share with you is saying I'll be fearful when others are greedy and I'll be greedy when others are fearful. It's much easier to say than to actually do. So as I said a moment ago, the property market moves in cycles, and when things were tough, it was hard to be a counter-cyclical investor. Remember, a year or two ago at the beginning of COVID, and in the second year of COVID, I spent every week sharing ideas on my podcast and on my YouTube channel and my blogs, and I suggested it was a great time to get into the market counter-cyclically. Those who did have done very, very well. But most investors are overly optimistic during booms when they should be the most cautious, and most pessimistic during downturns when they're surrounded by opportunities. The next truth I'd like to share with you is no one really knows what the property market's going to do in the medium term. Now, in the short term, over the next months or so, it's pretty easy to tell what's happening with the various indicators, while in the long term, our property markets are driven by fundamentals, and they're easy to quantify as well. But in the medium term, human emotion, crowd psychology play havoc with the best laid forecasts. Just have a look what's happened over the last couple of years to all those forecasts. And then every year there's an unknown X factor that comes out of the blue to surprise us, sometimes on the upside, but more often on the downside. Now, I'm not talking about major disruptions like COVID-19. They're the once-in-a-decade events, because I've noticed that the world breaks about once every 10 years or so. However, there are always unexpected X factors that come out of the blue each year. A couple of years ago was the election win of Scott Morrison, when everyone thought the property market was going to tank, when Labor government said that, boy, they're going to win the election and they're going to affect the property taxes. Again, this year we're going to have an election. Let's see what all that shows. Another truth is that real estate's a game of finance with some properties thrown in the middle. Strategic investors don't just buy property, but they buy themselves time in the market by having financial buffers in place to see them through the ups and downs of the property cycle. They have a smart, proficient finance broker on their side to help them get the right sort of loans, and to have a mixture of variable and fixed rate loans to make sure that they manage their money properly. Now, here's another truth that some of you won't want to hear. Property investment's meant to be boring. Now, I know lots of people love the deal. They love the excitement of it. They love the going to the open for inspections and negotiating. But my suggestion is, if you're looking for excitement, go bungee jumping, go trail bike riding. I believe you should make your investments boring so that the rest of your life is exciting, because you should be buying your investments and managing your investments based not on emotion and excitement, but on evidence and facts. Another brutal truth is that there's more free property information available today than ever before, but most of it's useless. I suggest that you keep your eye on the big picture and the long term, and avoid being distracted by the white noise and all the fake news. You see, the majority of news you're going to get every day on the internet is useless, Actually, it's more than useless. It's harmful to your financial health, because just look at all the stories about the fiscal cliffs and that cliff we were going to fall off when principal and interest loans came in and all the investors would end up failing, or the predictions of property Armageddon. The news media isn't there to educate you. It's sort of there to entertain you, I guess. It's there to get you to look at their advertisers' ads, and they're not aiming at educating you. Now, they don't want to get it wrong, but the media in general loves negative news or loves sensational news. And that's why the negative Nellies and the property pessimists keep getting all that airtime, despite being wrong over and over again. So that brutal truth was there's more information available than ever, but much of it's useless. So the next truth is be careful who you listen to. You see, most of what's taught about property investing is theoretical nonsense. Very few of the current property educators are independently rich from property. I know that. I know what many of them own. So rather than listening to the get-rich-quick stories, it's worth listening to those who talk about their mistakes and avoid spruikers who don't talk about their mistakes, because theirs are usually bigger. We're seeing this with advisors and with buyer's agents as well. You see, the last year of the property cycle, where almost every property boomed in value, made people who even weren't that smart look good. So you got a 10-12% return, and your buyer's agent who'd only been in the market for 6 months thought they'd done a real good job for you, when in fact you could have got double that if you'd done a strategic plan and had good advice. What I'm saying is that we're currently seeing a whole lot of young people, well-intentioned, not necessarily wanting to do the wrong thing, but trying to help people without the perspective and experience of what's going on in the big picture in the long term, because they've never lived through it. So as this cycle moves on, you're going to need the right team around you. By the way, my team at Metropole don't sell property, and for that reason we can give strategic advice, and our advice isn't based on you buying a property. Now, of course, we'd love you to use your buyer's agency or renovation or property management services, but having said that, we start off by giving strategic advice, which doesn't mean we force or recommend you buy a property if that's not the right thing for you. Why not go to metropole.com.au and find out a bit of our range of services. We have experienced property strategists with banking experience, valuation experience, economic experience that give you independent, strategic, but holistic advice. It's not too late to get into this property cycle, but you've got to be careful. The rising tide in 2022 won't lift all ships, so you've got to own the right sort of properties. And as I said at the beginning, be sure you're not stuck with the wrong properties at the end of the cycle. In fact, this may be a good time to sell some underperforming properties and replace them with better properties moving forward. The next truth is that there's virtually no accountability for the many property gurus and their hotspot predictions. I find it interesting that many of the people have been wrong about everything for years, yet they still draw large crowds of followers looking for the next get-rich-quick scheme. Or maybe I shouldn't find it interesting anymore. Nothing changes. The next truth I'd like to share with you is the more comfortable an investment feels, the more likely you're to be taken by marketers or salespeople. So avoid rental guarantees, avoid promises of certain returns, avoid those sort of things that they have to give you to make you feel more comfortable, because property investment does carry risk. So you've got to be careful knowing what they are. I guess this is what this particular episode of the Michael Yardney podcast is about, to help you understand some of the traps and the unfortunate brutal truths people don't tell you about. Okay, the next truth I'd like to share with you is, despite what most people like to think, the biggest difference between the ultra-successful property investors and the rest, it's not their property strategy or their investment secrets. In my mind, it's the way they think, their mindset and their rich habits. Wealthy people do think differently, and that's why I regularly have chats with Tom Corley on this podcast about rich habits. That's why my book, Rich Habits, Poor Habits, that I wrote with Tom Corley has been such a success. I really suggest you get that. It's been translated into I think 5 or 6 languages now. Just recently, at the end of last year, Russia's picked it up. It's big in Poland, in Vietnam, China, and Malaysia. English, of course, in the United States and England. Rich habits, poor habits. I haven't got time to go into it in this particular podcast other than to remind you that the wealthy people don't do things in a different way. They think in a different way. And that's why most of my podcasts have a mindset moment at the end. I know they're very popular. Hey, I'll share one with you at the end of this show to help make sure that you're on the right track as well. Another truth I'd like to share with you is that if you've got credit card debt and you're thinking about investing, stop. You're never going to be 20% annual interest that you're going to get from paying down your bad debt. So my suggestion is become financially fluent before you start investing. Otherwise, the significant debt you're going to take on to buy a property is most likely going to overwhelm you. Despite what the average person believes, though, debt is good as long as it's used to buy appreciating assets. So you've probably been taught that debt's bad. Many of our parents taught us that. I believe in today's low interest rate environment, even though interest rates are creeping up, but in today's low interest rate environment where you can borrow at 3% and you can buy a property that goes up at 8-10% per annum and brings 3-4% yield, well, you're getting at least 10% per annum return then. Borrowing at 3%, having debt is an asset. It makes you money, doesn't it? But you've got to understand how to manage your money. Okay, the next brutal truth is residential real estate's a high growth, relatively low yield investment. So don't buy real estate for cash flow. Now, of course, cash flow is important. It keeps you in the game, but it's capital growth that will get you out of the rat race. I've discussed this previously on a number of podcasts, and you'll find it in my blogs on Property Update, why investing for cash flow just won't get you to the next level. You'll never save your way to wealth. At the end, when you eventually retire, the majority of your assets won't be the money you've saved, won't be the rent that you've received, won't be the tax that you've saved. What it will be is the tax-free capital growth of your assets, like real estate and shares. Once you have built a big asset base, then you can start looking for cash flow. But residential real estate isn't a high cash flow investment. Now, commercial property investment does offer higher cash flow, but there are risks with that. And I'm going to do a podcast about commercial investing again soon. I did one quite a while ago, but since more people are interested in it at the moment, I'll spend a bit of time explaining that to you coming up. Now, the next truth, and I shared it a little bit a few minutes ago, was that there are 3 stages in your property investment journey. So it's important to know where you are along your journey. And the first stage is the education stage, where you've got to learn about all these things. But as I said, learn from the right people. And then you've got to go through the asset accumulation stage. And this requires leverage. This requires debt. You can't grow a property portfolio without debt. And that's why I said right at the beginning, you've got to have money to make money. You've got to have money to invest in property, because the banks aren't going to lend you money unless they know that you've been able to save some and that you can handle your finances properly. But you use leverage and gearing and time to grow an asset base. The next stage is you slowly reduce your loan-to-value ratios until eventually you can live off your cash machine of your properties. I believe at the end of your investment journey, you should own your own home with no debt. So when you're in your retirement phase, now a lot of people don't retire anymore, but they just work part-time or holiday more or work remotely now. But the end stage should be that you should own your own home with no debt, because you don't want non-income tax deductible debt in your retirement years. So you own your own home with no debt. I'd like to see you own an asset base, which is not just property, but it should have a large portion of residential property with a lowish loan-to-value ratio. Remember, you actually lowered your loan-to-value ratios to get to this point, and also some income, some cash flow assets as well, which could be commercial property, it could be shares, it could be managed funds, it could be a superannuation. So you need a mixture of funds. Anyone who tells you property only is probably not giving you the right advice, just like if anyone says shares or managed funds only or superannuation only either. So once you get into your retirement years and you have a portfolio of property, even if it carries some debt over the years, your property portfolio will increase in value. The debt will become a smaller percentage. That's why we need to plan to show you how much you need, what proportion of debt you're able to carry, what proportion of commercial residential property shares you should have in your portfolio. Again, that's why we start by putting a strategic plan together, as I suggested at the beginning of this chat. If you want my team to help you, why not go to metropole.com.au to find out about our range of services so we can help you with your property portfolio. The last brutal truth I'd like to share with you is however many properties you think you're going to need to provide cash flow for your retirement, double it. And then you're closer to reality. Many people say, oh, look, you can live on 3 or 4 properties or 2 properties. Well, I don't know what sort of life you want to lead, but it seems that we're going to be living longer. We're going to be living more healthily, despite COVID and all the issues that are currently happening. I don't want my clients to have a nest egg and eat it up and not leave anything behind when they retire. 2 things could happen. First of all, they could live longer and outlive their money. But more importantly, I'd like to see them leave assets to their children and grandchildren to create intergenerational wealth. So the last brutal truth I want to leave you with is no matter how many properties you think you need to provide cash flow for your retirement, double it and you're closer to reality. Well, there we go. A number of unfortunate truths about property that I think are worth understanding, because I still think property investing is the best way for the average Australian to grow their wealth. But the journey is difficult. It's exciting when you buy the property and then nothing happens for a number of years, and then you'll buy another property and nothing happens for a while. Then you may buy 2 properties. But in between, lots of things happen, lots of things go wrong. And that's the bits that I wanted to share with you today, because I want you to stick to the journey. I want you to stay the distance, because once you build that asset base, you'll be able to enjoy the life you deserve. At the beginning of this episode, I mentioned to you that I'd share some brutal truths. So let me share one more with you. And that is that while property investing may be difficult, if you get it right, it's a very lucrative way of securing your financial future. And one way to ensure that you have the odds stacked in your favour is to have good consultants around you, like my team at Metropole. Now, I showed you that, in fact, only 20,000 odd Australians own 6 properties or more. But a recent audit, well, it happened 2 years ago now, of our clients at Metropole showed our clients are 7.3 times more likely than average to own 6 or more properties. And I guess the reason is we take a holistic, strategic view on property investing. So if you want to stack the odds in your favour, why not have a chat with my team at Metropole? Go to metropole.com.au, find out about what we do, leave us your details. By the way, we don't sell property. Sure, we have Australia's most successful and largest buyers agency, but it all starts by giving you strategic advice, and then you may choose to use our buyers agency. And by the way, our buyers agents don't fly in or fly out. We have our on-the-ground teams looking after our clients, people with experience, knowledge in our capital cities. We have property management, renovations, development, wealth advisory, financial planning, and business advisory. I'd like to be part of your wealth creation journey, so go to metropole.com.au, find out about what we do, and I look forward to being part of your ongoing wealth creation journey.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to share with you the idea that everyone is born lucky, and that your very existence is all the proof you need. Now, this came from a blog recently written by my good friend Tom Corley, the co-author of our great international bestseller, Rich Habits, Poor Habits. In that blog, Tom Corley mentioned Dr. Ali Benazir, the author of The Tao of Dating, and he estimated that the odds of you existing are 1 in 4 quadrillion. He makes a very impressive analytical argument in arriving at that number in his piece, Are You a Miracle? It's a great piece, but to save you time, here's the short of it. Humans have been around for about 3 million years, or 150,000 generations. The odds of your ancestors surviving those 150,000 generations are staggering. The odds of your parents meeting, they're staggering. The odds of one of the unique sperm meeting one of the unique eggs is staggering. In short, you are a miracle just by virtue of being alive. You're an impossibility, yet you're here. Despite the fact that your existing defies impossibility, so many people live their lives drowning in impossibility. Rather than embracing the knowledge that your mere existence is proof that anything is possible, the average person sees impossibility everywhere. They view their lives through the lens of impossibility, allowing limiting, negative beliefs to anchor them to lives of mediocrity. What a shame. When you consider the near impossibility of you being alive, it leaves no doubt that everyone who's alive was born lucky. The very fact that you exist means you're lucky. It also means that your very existence is a gift. You've been given a very rare opportunity to exist, which means you've been given the opportunity to make that life meaningful. You're clearly here on earth to do something with that gift that life gave you. Knowing you should not even be alive, that your existence defies the laws of probability, is all the evidence you need that anything's possible. You can realize those dreams. You can achieve those goals. You can become successful. You can become rich. The life of your dreams is not impossible. Why? Because your very existence means that you were born lucky. Be grateful for the opportunity life has given you. Stop thinking it's impossible and start thinking, I'm lucky to be alive, and therefore anything is possible. So my recommendation is go after your dreams. Pursue your goals. Never quit on them. You're here, and statistically you shouldn't be. That means all is possible because Lady Luck is on your side. Thanks for spending the last half an hour or so with me, and if you got some benefit from this episode of the Michael Yardney podcast, it would do me a real favour. I'd be really pleased if you just tell one person about the Michael Yardney podcast to help me on my quest to make as many people as financially successful as possible. Of course, you can leave a review on iTunes or wherever you listen to this, but I'll be back again twice a week. In the meantime, you can catch me on social media. Just look for Michael Yardney, or why not join me in my private Facebook group where every day I leave a tip, a chart, something that I don't leave elsewhere. Just go to Facebook and look for the Property Update private Facebook group. Now, as a way of saying thank you for listening to my podcast, I've got some bonuses for you, some special reports and ebooks. Just go to podcastbonus.com.au. I'll leave a link in the show notes, podcastbonus.com.au, and I will pass on to you some extra reports and ebooks, some reading to put in your success library to help you move forward. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?